Hello and Assalamu alaikum. I am Kashif Kamran and I welcome you to the day 2 of the Advanced Audit and Assurance Practice to Pass webinar being organized by ACCA Pakistan for March 2020 exams. Now, yesterday we had the first day where the agenda was set, and on the very first day, we established that the day 2 is to be on risk of material misstatement. And that is exactly from where I will be starting on the second day. But just a quick reminder that yesterday being the first day was a very important day because I focused on reading the mind of examiner, and that particular reading the mind of examiner will play a very crucial part over the next 4 days. Now, if any one of you has missed the day 1, please assure that you uh, watch the recording of the day 1 as soon as possible so that the rest of the days becomes much easier for you because there is a connectivity between the day 1 and the day 2. So the day 1 was reading the mind of examiner, and the day 2 today is basically the application of the mind of examiner to the topic known as risk of material misstatement. Now let's start on with the day 2 agenda, which is to practice risk of material misstatement. And we know risk of material misstatement is a very important topic, which is even high likely for the March 2020 exams. And irrespective of its high likeliness, it is a very, very important topic, and a topic where most of the students struggle to write a very good answer. Now, you can watch my previous webinars as well. You can watch my December webinar, my September webinar, my June and March webinar, because you can get more practice, not just on risk of material misstatement, you can get more practice on audit risk and even business risk. So if you want to explore all the areas, then you can go down and watch the previous webinar. This particular webinar is focused on risk of material misstatement. Now, in the session today, I will be focusing on one very detailed exam question as an illustrative question to solve many confusions of the students and to apply the mindset of the examiner, which we spent time on yesterday. Now, I have chosen one exam paper, a very recent one, which is from the June 19 exams, which is basically the hybrid exam, March, June 19. And I've taken the question number 1 just to be assured that this is the latest question and just to assure that you are given the right direction for March 2020 exam. Once the session ends today, you can practice more questions. You can practice the question number 1 from June 18 exams, and you can practice the question number 1 from September, December 19 exams. So that is like your home assignment, which you can practice after the learning from the day 2 today. Now, just before I start on with the practice question, which is the June 19 question paper, I just need to spend some time first on realizing what a risk of material misstatement is or what an audit risk is in an exam perspective, so that you have an idea about the topic. And then I'll try to connect the idea of the topic with the exam paper. Okay, now in terms of the understanding, because there might be many students who will be appearing for the first exam sitting for AAA in March 2020. And those of you who are repeating do also need to have a clarity of understanding on what basically is an audit risk or a risk of material misstatement. Now, in terms of your knowledge, when we speak of audit risk from an examination point of view, and because you are not just a AAA student, right? You have a carry forward effect from the AA paper. So the structure of audit risk is what you do in the AA paper even, and you translate that into a AAA paper with a greater maturity, because you become a manager. Now, when you look at the audit risk consists of two components. One component of the audit risk is the risk of material misstatement, and the other component of the audit risk is known as the detection risk. Now, if in an exam paper you get a question on audit risk, which has come so many times in past paper, then basically in that question, you are doing two things. You are identifying the risk of material misstatements in that question, and somewhere in the case study, if there is a detection risk, you will also be identifying that detection risk as well. So that is the structure of a question on audit risk, which consists of two parts: the risk of material misstatement and the detection risk. Now, the risk of material misstatement can also come as an alone question. Now, if you're attempting an alone question on risk of material misstatement, then you're only concerned about risk of material misstatement. You're not concerned about detection risk. So if in an exam paper you are faced with a question on audit risk, then audit risk consists of two parts, right? But if in an exam paper you get a question just on risk of material misstatement, then the risk of material misstatement is just the risk of material misstatement, right? It does not include the detection risk, right? So is everyone clear on the two types of question? Either you get a question which asks you evaluate the audit risk, or you get a question in the exam paper which asks you evaluate the risk of material misstatement. So when you are attempting a question on audit risk, it includes both. But when you're attempting a question on risk of material misstatement, it is only the risk of material misstatement which you are identifying and scoring your marks. Now, from the sake of knowledge, the risk of material misstatement basically includes two. The inherent risk is part of the risk of material misstatement, and the control risk is part of the risk of material misstatement. So that means that when you are identifying the risk of material misstatement, you are identifying inherent risks and you're identifying control risk, because that is the sum of the risk of material misstatement, right? So audit risk, if a question comes on audit risk, then you are identifying from the case the risk of material misstatement and the detection risk where possible. But if a question comes on risk of material misstatement, then you are only identifying the risk of material misstatement, which includes the inherent risk and control risk. Now, just a question to all of you. So I know that you heard me clearly and you noted my lecture very carefully. Do you believe that risk of material misstatement is a very critical component? Because without risk of material misstatement, you cannot even solve a question on audit risk. Is that true? Do you all believe risk of material misstatement is a critical component? Because if you are weak on risk of material misstatement, you can not even solve a question on audit risk. And if you are good on risk of material misstatement, you can solve a question on audit risk, right? If you're good on risk of material misstatement, you can solve a question on audit risk, and you can also solve an alone question which asks for risk of material misstatement. So that means if your ROMM is strong, you are strong in audit risk, and you're also strong on a separate question which comes in the exam paper, which is known as risk of material misstatement. So my session today will make you stronger on risk of material misstatement, because if you are stronger on risk of material misstatement, then you can control two questions in exam paper. You can control a question on audit risk, and you can control a question on risk of material misstatement. So do you all agree that the most critical component where you should all be strong at is the risk of material misstatement? If you can just quickly drop in your answers. The most critical component where you all need to be stronger at is the risk of material misstatement, right? Because if you are stronger in that area, then you can solve a question on risk of material misstatement, and you can even solve a question on the audit risk, right? So my focus today would be on ROMM, but yes, I can give you some examples of detection risk uh, later in my session. It's too early to give you examples of detection risk, but I hope everyone is clear with the illustration of audit risk and the illustration of the risk of material misstatement. Now, moving ahead, when we look at the component, which is a very critical component, risk of material misstatement, what exactly risk of material misstatement means? Because you need to be clear on risk of material misstatement uh, from your examination point of view, so that from within a case study, you can identify the risk of material misstatement. Now, the definition of the word misstatement has been given in the ISA 450, and the ISA 450 defines a misstatement as a difference, a difference between the amount, a difference between the classification, a difference between the presentation or disclosure of a reported financial statement item. So we know that in the financial statement, so many things are reported. In the financial statement, the amounts are reported. In the financial statement, there is classification of items. In the financial statement, there is a presentation. In the financial statement, there is a disclosure. So it is a difference between the amount, classification, presentation of the financial statement item and the amount, classification, presentation, or disclosure that is required for the item in accordance with the applicable financial reporting framework. So what is the misstatement? The misstatement is basically the difference between something reported versus something required. Now, the auditor is very much concerned with what is required because auditor has to adhere to IAS and IFRS. So that is the purpose of conducting the audit. Something reported, management. Now, whenever the management reports something, there is a risk. Do you all agree with that? Whenever the management reports something in the financial statement, there is a risk. If I can get you quick answers. Whenever the management reports something, do you all believe there is a risk? Because whenever the management reports something, there might be a misstatement. The management might have done something wrong, or the management might have understated something, or the management might have overstated something, because the management is involved in the manipulation. The management is involved in the window dressing. So what should the auditor do? The auditor needs to find the difference between what is reported by the management and what is required. If the company if the company has recognized a research and development cost, then the auditor needs to confirm whether the development cost has been capitalized only when the criteria of the development cost was met. Is that true? So if the management has capitalized the development cost, auditor will assure that the development cost has only been capitalized when the criteria for development has been met, right? So the auditor is very much concerned about the financial statement, right? And the auditor is very much concerned that if the management has done something, has it been done in line with the IAS and the IFRS? So if you are good on the accounting treatments in the exam paper, you can identify the difference. You can identify the problem. If the company has not recognized a share-based payment expense, then you need to question management that why they have not recognized a share-based payment expense when it should have been recognized as per IFRS 2. So you need to find the differences when you're reading the case study, and you need to be skeptical, because whenever you're finding a risk, you can only find risk as a student only when you demonstrate something known as skeptical. If you are skeptical, you will find risk, because you need not to favor the management. You need not to appreciate the management, because the management is the one who is involved in the window dressing. Is that true? But if you start to favor management, if you start to support management, then you will not be finding the difference. So should you be critical of whatever the management has done? Should you be critical of what the management has done? Should you be skeptical about what the management has done in the financial statement? You cannot be supportive of the management, right? You cannot appreciate the management, because as an auditor, you need to be skeptical about the management reporting, because the management is the one which is involved in the window dressing of the financial statement, right? So you need to be very critical of the management reporting, and you need to confirm whether the accounting treatment is right or wrong. If the accounting treatment is wrong, then there is a misstatement, and that misstatement will give you marks in the exam paper. So is everyone clear with the meaning of the term misstatement? Is everyone sound on that meaning? Because that is the most important thing you will be doing today in the session, to identify a misstatement, to identify a risk of material misstatement. So it is a difference between something reported and something required. I hope all of you are clear on that, because I'm proceeding further into the session. Okay, now because the misstatement is a difference between what is reported and what is required, and that needs accounting standards, and you should be very good on accounting standard. It is highly recommended that you attempt your SPR paper prior to the AAA paper, or it is highly recommended that you do the SPR and the AAA paper together, because you will be very good on the accounting standards. So identifying a misstatement for a student will become very good. But over a month which you have for exams, if you want to be really good on accounting standards, you can still revise it. What sources can you use to go through the accounting standards and revise the accounting standards? Number one, the BPP or the Kaplan book. If you have a BPP or Kaplan book, I think the last chapter of the BPP or the Kaplan book is basically the summary of the financial reporting standards. So if you have a BPP book or a Kaplan book, then you can explore the last chapter, which is basically the financial reporting revision or a financial reporting summary. And that can be wonderful for you to revise your accounting standards. Number one. Number two, you can even see the examiner past answers, not for the length of the treatment, how long the examiner writes a treatment. No, we even discussed that yesterday. You can just go through the examiner past answers to learn the treatments. Suppose you're doing a question and you're stuck in the accounting treatment. Go and see the examiner answer for the treatment, and immediately you will learn the treatment. So even if you're stuck somewhere in a case study and you don't know the accounting treatment, go and see the examiner answer to see what accounting standard the examiner has applied to a given situation. And that is a one very good source from where you can learn the accounting treatments. Again, my focus is you're not looking at the length of the treatment, you're just revising the treatment which the examiner has written in the answer. So that's the source two, right? From where you can get to know the accounting treatments. Source three, there is an article which I even recommended yesterday, the technique articles. And there is a part three technique article, which is on accounting issues. And I did mention that in my day one yesterday, that you have to maintain a file, and in the file, you need to have the 5 technique articles. So if you look at the technique article part three, the part three of the technique article, it is on the accounting issues, and it covers the most frequent accounting issues which comes in the AAA paper. It covers IS 36, which is impairment. It covers the IS 37, which is basically the provisions and contingencies. And we know 36 and 37 are like very repetitive treatments in the AAA paper. So it's better that you read the examiner article accounting issues part 3, in which the examiner has given you examples of types of situations which comes on impairment and types of situations which comes on provisions and contingencies. Summaries. You can find summaries so readily over the internet and so readily over the student groups, right? And you can search for summaries. Even the WhatsApp group which has been created, I can put my own summary there as well, right? So when you're exploring the accounting issue article, you will be getting an insights of 36 and 37. And even you need to remember that 38 is a very important accounting standard which comes repeatedly. So you can explore 36, 37, and 38 from the examiner technique article, because these are very, very repetitive areas. So you need to be good on 36, you need to be good on 37, you need to be good on 38, right? So please ensure that you polish these three accounting standards, because they're very, very regular feature of exam paper. So is everyone clear with the resources? Whichever resource you choose, whether it's the summary given in the book, whether it is the examiner past answer, the accounting issue article, this is must. This is must, right? This is must for everyone. You cannot skip it. Rest is your option. How would you revise the accounting treatments? Rest is your option, but the accounting issue article is a must, right? I hope everyone is clear on that, how to go about the accounting treatments. Okay, now finally, before we start on with the exam paper, let's establish an approach of a risk of material misstatement answer. I hope you all know that the examiner has written an article, which is the exam technique article part 2, which I recommended yesterday. This one, the exam technique article right in front of your screen. It has also been shared with you as part of the resources for the day 2. This article on exam technique will become the focal point of my session today, because this article on exam technique will give us techniques. This article will give us techniques about the topic we are in today, that is risk. So if you explore this article in full, you will get the examiner mindset and you will understand how to score good marks. Now, this is such an important article written by the examiner, which tells students that if you are writing a question on business risk or audit risk or risk of material misstatement, examiner has covered all of them, right? My previous webinars have covered business risk, audit risk, and ROMM, but currently I'm just focusing on risk of material misstatement. Now, this article, part 2 on risk, if you go down this article, which is on the page number, when you go on page number 5 of this article, right? On the page number 5, you will find a big paragraph here, which I'm just bracketing in the green. This paragraph is crucial, because if you read this paragraph from the start to the end, you will exactly get to know how will you write a risk of material misstatement in exam paper and how will you get marks. See, your examiner has even defined the steps to construct your answer. Steps to construct your answer. See, I have no idea how many of you so far have not even bothered to read this article when your exams are just 1 month away. Examiner is telling you the steps to construct your answer. And I did make you realize yesterday in the day 1 that these reading the mind of examiner is so very important, because you cannot have your own steps to construct your answer, right? You need to follow the examiner's steps to construct your answer. So examiner has given you 4 steps. I hope you can see the numbers 1, 2, 3, 4 on the left hand side. So examiner is giving you 4 steps to construct the answer, which I will be doing with you in my live session today. But this particular uh, paragraph given by the examiner on the page number 5 about the risk of material misstatement is such a wonderful paragraph which tells you how to write an answer on risk of material misstatement, right? And I'll be focusing on it throughout my session today. So I extracted the summary of this on my presentation, but if I can directly read from the examiner steps to give you an idea about how to construct an answer on risk of material misstatement. I'm reading the point number 1. The point number 1 says, calculate and conclude on materiality of the issue where sufficient information is available. So examiner is saying the very first thing you have to do when you're writing an answer on risk of material misstatement is that you calculate the materiality and conclude on the materiality. Conclude on materiality means is it material or is it immaterial? So you calculate the materiality and you conclude on the materiality where sufficient information is available. So that means materiality cannot be calculated every time. Materiality can only be calculated when sufficient information is available. A mark will be given. Examiner is saying you will get a mark. A mark means 1 mark. A mark will be given for the correct and relevant calculation of materiality. So examiner is saying that you will get a mark. So you will get a mark will be given for the correct and relevant calculation of materiality. So 1 mark, right, for determining the materiality and commenting on the materiality with an appropriate conclusion. This will only be awarded once per issue, and materiality marks may be capped in an exam paper. So examiner is saying that 1 mark per materiality, but the materiality marks may be capped in the exam paper. So it's not like that when you're attempting the question number 1, because this capping is in the question 1. A lot of students have misconception that examiner caps the marks for materiality in the question 2 and question 3. No, examiner only caps the marks for materiality in the question number 1, right? And in the question number 1, if you're attempting a question on audit risk, or if you're attempting a question on risk of material misstatement, examiner is saying I'll give you 1 mark for materiality, but the marks may be capped. How many marks are capped? If you read the examiner answering the marking scheme, which I guided you yesterday, the most updated marking scheme, I told you yesterday to read the updated marking schemes, right? So the most updated marking scheme says the marks are capped up to 3 now. It used to be 4, now it's 3. So examiner is capping the marks of materiality to 3 now, not to 4. So how many materialities you can calculate in an exam paper in the question number 1? If I can get you quick answers. Question number 1 only, right? In a question number 1, how many materialities you can calculate? 3. Why 3? Why 3? Because the examiner has capped the marks of materiality to 3. Not 4, right? Not 4, 3. 4 is the old marking scheme. The new marking scheme says 3. So the marks are capped up to 3, not 4, right? 3. So 1 mark per materiality. So how many materialities we can calculate in the first question for risk? Only for risk, right? How many materialities we can calculate for a risk question? Maximum 3. The second thing the examiner says briefly describe the relevant accounting treatment. The focus of the examiner is briefly describe the relevant accounting treatment. Briefly describe. There is no credit for the name and the reference of the accounting standard. It's only the treatment. Can you see this in black and white? The examiner is saying you will only get 1 mark for an accounting treatment when you briefly describe the accounting treatment. Do you all understand what is the meaning of the word briefly? Because that is a misunderstood word in the student community. Is the examiner saying describe the accounting treatment? No. Examiner is saying briefly describe the accounting treatment. So is everyone clear on that word briefly? Because that's the most misunderstood word, right, in the student community. And is the examiner asking you to write the name and the number of the accounting standard? Is the examiner asking you to write the name and number of the accounting standards? If I can get your answers to that. No. And is the examiner saying write a very lengthy accounting treatment? Right? Examiner saying just briefly describe it. How many marks we have for an accounting treatment? 1. So I will just be illustrating in my live session that how much of an accounting treatment can you write for 1 mark? You cannot just drag your accounting treatment. You cannot just put the entire strategic business reporting in your AAA paper. You need to control yourself because you're just getting 1 mark. Right, I'll be demonstrating the answer, so a lot of confusions will go off when I start to draft the answer. Okay, then number 3 says, relate the risk in the scenario to the accounting treatment. Now, once you have written the accounting treatment, then the examiner is saying, relate the risk to the accounting treatment. What is the risk? Has the management classified something wrongly? Has the management presented something wrongly? Or has the management recognized something wrongly? How many types of accounting risk can be there? There could be a risk of wrong recognition, number 1. There can be a risk of wrong classification. There can be a risk of wrong presentation, or there can be a risk of wrong valuation. You're all accountants, right? So what can be a risk in the accounting treatment? Either it could be a wrong disclosure risk, it could be a wrong presentation risk, it could be a wrong recognition risk, it could be a wrong classification risk, or it could be a wrong valuation risk. So examiner is saying relate the risk to the accounting treatment. So is everyone clear on the risk? Uh, Wrong recognition, wrong disclosure, wrong classification, wrong valuation, wrong classification. Is everyone clear on that? Risk. And finally, the examiner is saying illustrate the impact of the risk. So examiner is saying once you have identified the risk, now tell me the impact of the risk. Now we know the impact of the risk is understatement, overstatement. If something is not recognized, then obviously something is understated and something is overstated. Are you getting the 4 steps of examiner? I'll be doing it in an exam paper, but the first step is to determine the materiality, right? How many materialities we need to determine? 3. Then we need to describe the accounting treatment. Lengthy accounting treatment, very lengthy accounting treatment. No, briefly. Do we need to tell examiner the risk or just the impact? Can you bifurcate between a risk and an impact? The risk is the recognition, the risk is the classification, the risk is the presentation, right? And then finally, you need to ensure the impact of the risk on the financial statement, that is understatement and overstatement, right? Just for one clarity, when you see the marking schemes, and when I say the marks are capped for 3, right? You need to understand that in certain exam settings, the examiner says that the marks for materiality are capped up to 4. And in certain exam settings, the examiner says the marks are capped up to 3. And this have happened in both the recent exam papers, right, of 2019. So the better rule is to take 1 mark less in exam paper rather than you are writing 4 marks for materiality. I think in the June 19 exam, the examiner used the marking scheme of 3. Then in the December 19 exam, the examiner used a marking scheme of 4, but to be on the safe side, used 3. Even I recently attended some of the conferences which happens for the tutors with examiner, and I think that happened just few months ago. in which the examiner was very clear to use a 3 cap, not a 4 cap, right? So the rule you will take to the exam paper is 3. You will not take the rule of 4 in exam paper, right? So is everyone clear? How many marks will you keep for materiality in exam paper? If I can get your quick answers, 3. Okay, is the structure of risk of material misstatement clear? And that is exactly given on my slide. If you can read through my slide, which is right in front of your screen, I've written everything very clearly on my slide, which I have extracted directly from the examiner article. So bullet number 1, bullet number 2, bullet number 3, and bullet number 4 is just what I just illustrated with you. So that is the approach of a risk of material misstatement, how you can get marks. 1 mark for materiality, 1 mark for an accounting treatment. That is what the examiner is clearing, right? How many marks we get for risk, how many marks we get for impact. That is something which I will illustrate once I start writing the answer. Now, you need to understand that once I start writing the answer, I will make the clarity of the marking scheme, because there are 2 marking schemes for ROMM, or for audit risk. There are certain audit risk which gives you 3 marks, and there are certain audit risk which gives you 2 marks. Now, when you're writing the answer, how would you know that this risk is giving me 3 marks or this risk is giving me 2 marks? So I will be demonstrating that, right? The risk which gives you 3 marks and the risk which gives you 2 marks. But is everyone sound that materiality is maximum materialities you can calculate in the first question is 3, and there is 1 mark per materiality, right? And 1 mark per treatment. And once I illustrate the answer, I will bring more clarity to the marking scheme. And obviously, by the end of the session, every one of you will be very crystal clear on the marking scheme of risk of material misstatement and audit risk. Now, just before I start my journey on the March, June 2019 exams, which I need to go through today in the session and guide you about writing the answer, developing the answer, and every frequently asked question of the student community about attempting a question on risk. There are so many already in front of my screen, which I have just noted down, and I will be focusing on all those questions in terms of when I get to the solution part of the question after a very short break. I'm taking a namaz break for like 10 minutes, and within 10 minutes, I'll be resuming back live with the June 19 question number 1, just to illustrate how are you writing a very good answer for audit risk and risk of material misstatement. Okay, so it's time for a break, and post break, come back live, because you will have a more better understanding about how would you go down writing in the answer, right? So there is a break now, and the break will stretch up to 6:50 p.m. Pakistan Standard Time. It's currently 6:40 p.m. Pakistan Standard Time. So just a 10 minutes break, right? And after 10 minutes, we'll resume back live. Don't miss the session at 6:50, because I'll directly start on with the June 19 paper, and we'll drill through the June 19 paper in a very different manner. And that will really be an eye opener for all of you, how you can gain marks in the AAA paper. Okay, off to a break, and I'll see you back in 10 minutes. And please keep dropping your feedback about the first 50 minutes of the session so far, how insightful it has been. So I'll be looking forward to your feedbacks within the break, and I'll meet you back in 10 minutes. Hello and assalamu alaikum, and welcome back to the second session of the day two of the Advanced Audit and Assurance Practice to Pass webinar for March 2020 exams. Just prior to the break, I was focusing on the structure for risk of material misstatement. We established that today I will be doing a question from June 19 exams, which is on audit risk, simultaneously the risk of material misstatement. We establish the formula for risk of material misstatement and the audit risk, and how can you solve a question on audit risk and a risk of material misstatement. Then we did had the discussion on the term misstatement. What exactly is a misstatement, which is basically a difference between something reported and something required. Then I gave you some suggestions about how can you revise the accounting treatments. And then finally, we came down with the breakup of how to write uh, a good answer for risk of material misstatement, which was exactly given in the examiner technique article part 2, where the examiner was giving you all a very structured approach for writing the risk of material misstatement answer. We had discussion on materiality, the marks for materiality, and the capping of marks for materiality, concise accounting treatment, not a very long accounting treatment, and no names and no references of the accounting standards. Then you need to comment on the risk where possible, and then you need to comment on the impact, what is under and overstated. Okay, now let's start on with an exercise. And during the course of my exercise, I'll be guiding you about the types of questions which comes on ROMM and audit risk. And if there is any distortion in the marking scheme, then I'll be guiding you about that as well. So that at the end of my session today, in the last 10 minutes perhaps, I will be making a consolidated structure of the marking scheme for the risk of material misstatement and audit risk. So keep your focus on the practice. Don't get distracted with raising a question, because you can raise a question later on the WhatsApp group even, and I can respond on the WhatsApp group for clarity. So I would suggest that you just stay glued to the screen and just keep concentrating about how will I be starting on with the practice phase. Right. Okay. And again, the clarity on the marking scheme, that how many marks will you get for risk and impact, that will eventually come in within my session. And again, for clarity's sake, business risk, I've done that multiple times in my previous webinar. You can go and watch my previous webinar. And business risk just came in the last exam sitting December 19. So for that reason, it's not even important for March 2020 exams. And that's the reason I'm focusing on risk of material misstatement. Okay, let's start on with the journey. We need to start on with an exam paper, which is the March-June 19 exam paper, which is right in front of your screen. And from this March-June 19 question paper, we have to do the question number 1. Okay, now to apply the learnings in a very comprehensive way, and to assure that this question gets solved in full, we have good 2 hours to do that. I need to demonstrate many things through this question 1 of the June 19 exams, right? Let, let me first put something down on my Word file to give you the objective. Now, when I'm looking at the question 1 for the June 2019 exams, and I'll be putting this Word file at the end of the session on the WhatsApp group. So you just need to concentrate on how things get developed on this Word file in front of you. I need to do a lot of things from the question number 1, June 19. Number 1, what I taught you yesterday. 1 is the time management. That when you are attempting the first question, which is for 50 marks, you need to be very focused on time management, and you need to assure that I have given you the time management yesterday. I hope all of you have noted that time management yesterday, that when you are attempting the first question, you should know that you have ideally 24 minutes to read and plan the first question, 24 minutes for reading and planning time, and you have 74 minutes to write the full question number one, not just the risk. So 24 minutes to read and plan and 74 minutes to write. That's the complete question number one, right? Not just the risk part. That I will be applying that. Number two, what is my objective? My objective is to show you how to gain professional marks. And we know that in the first question, there are 4 professional marks, which relates to writing a briefing note. And those of you who attended the session yesterday know that the 4 briefing note marks are available for heading, introduction. I hope you remember the mnemonic I made yesterday, HICS. Heading, how many of you remember that HICS, the breakdown of briefing notes? Heading, introduction, structure, and clarity. Structure and clarity. I hope you remember that, right? We did that yesterday in the session, that a briefing note will give you 4 marks, but you should know how to write a proper briefing note. And again, that is my objective over the next 2 hours, because I'm doing question number 1, so I want to do it in a very proper manner. Time management, how to gain professional marks, right? 2. Number 3, to give you an ideal answer for ROMM or the audit risk, because both are same except for detection risk. So an ideal answer for ROMM, that is the point development. How would you develop point? The point development, which we were concerned about yesterday, the point development, how to write a good answer for a reasonable length, because we need to assure the time management, right? So the point development, avoiding the do's and don'ts, reading examiner report for question number 1 of June 19. I will be doing that simultaneously today in my session, that if I am solving the question number 1 of the June 19, I'll be reading the question number 1 report as well, so that you know that examiner, whatever the examiner is saying is incorporated in our answer. So we'll keep reading the report, we'll keep writing the answer. So our answer is an ideal answer, is a good answer, and an answer which can give us a lot of score in the exam paper, right? Reading and planning time, RAPT. So an ideal answer, that's where I will be working on. And then finally, the clarity on marking scheme for both audit risk as well as risk of material misstatement, because both of them have the same looking marking scheme. So a clarity on the marking scheme would also come down when I start to go through the first question. So is everyone clear on the objective, time management over the next 2 hours, how to gain professional marks, how to write an ideal answer, and reading the examiner report for that, and clarity on the marking scheme? If that is done in the next 2 hours, at the end of the 2 hours, you will be so well prepared to attack another question number 1, another question number 1. So you can do as many question number 1 you want to do, but again, the focal point is the 4 bullets which are in front of your screen. Okay, let's start first with the question paper. Now, when you enter the exam hall and you get this question paper in front of you, and you're very nervous, you are in your stress level is very high, you're very nervous, what will be in the question paper, will I be able to do it, will I not be able to do it, and with all that nervousness you start on with the first question, and you turn the title page and you come to the first page where the question section A starts in. Now the moment you look at the section A, where you have 150 marks question to be attempted, And you start your journey by reading the question number one. So how much time you have to read the question number one and read in plan? 24 minutes. Let's see how we do it in the session today. Obviously, I cannot put 24 minutes because I have a limitation of time. But yes, I'll try to be as deep as possible so I can guide you about the mechanism of reading. You start reading in the exam paper. You are a manager in the audit department of Snow and Company, a firm of chartered certified accountant, and you are responsible for the audit of the Margot Company. The company has a financial year end of 30th of June 20X9, and you are about to start the planning of the audit. So we know that the question number one is set at the stage of planning. This was established in the day one yesterday, that the question number one is to be on the planning stage. Margot Company produces fruit-based food products using agricultural produce grown on its farm. Ben, the audit engagement partner. So our audit engagement partner is Ben. Ben, the audit engagement partner, met with the company's finance director last week to discuss the business development in the year and recent financial performance. So Ben had a meeting with the finance director, and that is the source of the knowledge. And that is exactly how a planning stage looks like, that the partner interacts with the director and they get the knowledge of the business. So let's see, after the discussion Ben and the director had, what the examiner is expecting from you. You are provided with the following exhibits. Now we know the question number one in the AAA exam consists of the exhibits, just like the strategic business leader exam. You are provided with the following exhibits. The exhibits are basically the annexures. Number one, an email you received from Ben, the audit engagement partner. The very first exhibit every time in the AAA paper has to be the email you receive from the partner, because this email consists of the requirements. So the moment you read the first exhibit is the email of the partner every time, and the email will tell you what you have to do: requirement A, requirement B, requirement C, and D. So email you receive from Ben. Number two, notes of the meeting which Ben held recently with finance director. Now, this notes of meeting would be very important. Notes of the meeting which Ben recently had with finance director, because this notes will give you the knowledge of business, and this knowledge of business will be very important to identify the risk of material misstatement, because I can only identify the risk of material misstatement from the knowledge of the business. So the exhibit number two for me is very important because it is giving me the knowledge of the business. And I know the question number one has to contain risk, even though I've not read the requirements. So I know that lot of risk can come from the, the exhibit two. Exhibit three, a reference document prepared by Snow Company, which is the audit firm, containing an overview of the accounting treatments applied in the agriculture sector. Because this company is in the agricultural products, so a reference document has been prepared by the audit firm, which tells you the requirements, the accounting requirements relating to the agricultural products. So even if you're not good into the IAS 41, uh, there is a summary given of that in this exhibit number three. Number fourth, extracts from the latest management accounts, including the results of the preliminary analytical procedures, which has been performed by the member of the audit team. So examiner is also giving you the latest management accounts, a lot of financial statements. And along with the financial statements, there is also the results of the analytical procedures. So you need not to do the analytical procedures. They have already been calculated. The results of the preliminary analytical procedures, which has been performed by the member of the audit team. Now we know the risk can either be from the note number two, which is the meeting partner had with the director, or the risk can identified from the numbers, preliminary analytical procedures. So for me, 2 and 4 is very important. So I can identify the risk from exhibit 2, I can identify risk from exhibit 4. The fifth exhibit, an email which the partner received from Len, a production manager working at one of the company's olive farms. So this is not an email which the partner is sending to you. This is an email which the partner received from one of the production manager, and might be uh, some very important email. There might be something very important in this email which the examiner expects you to do. So there is an email which the partner received from one of the company's employee. There might be something suspected. The employee of the company wants to inform you. But in all, we have 5 exhibits, right? Comes the requirement. Requirement says respond to the instruction in the email from the partner. So which email? Respond to the instruction in the email of the partner, 46 marks. And this is basically the email you got at number 1. The number 1 email you got, right, will contain the partner requirements. So you will read the email, exhibit number 1, and from the exhibit number 1, you will get to know the requirements, 46 marks. Then it says 46 marks is for the requirement, and then it says the professional marks will be awarded for the presentation and the logical flow of the briefing note. And there are 4 professional marks, making the total marks up to 50. So that's the first page, right? So when you read the first page, you get to know about your company, you get to know the stage of the audit, which is the planning stage of the audit. You get to know about the exhibits 1, 2, 3, 4, 5, and you also get to know what information is contained in which exhibit. Currently, the exhibit number 1 is very important because it contains the requirement. Exhibit number 2 and 4 is very important because you need to identify the risk of material misstatement, and the total marks are 46, but there are 4 additional marks for writing a briefing note. So that makes the 50 mark structure. Now you get to the next page in the exam hall and you start to read the first exhibit. And you know, this first exhibit is the email from the partner, which contains the requirement. So to from subject, hello. I've provided you with some information in the form of a number of exhibits which you should use, which you should use to help you with planning the audit of the market company for the financial year ending 30th of June. Using the information provided, exhibit 1, 2, 3, 4, 5, I require you to prepare a briefing note. So the partner is saying, I would like you to prepare a briefing note for which there are 4 marks, in which now what you need to do in a briefing note. In a briefing note, you have 3 requirements, or rather 4 requirements, A, B, C, D. So in a briefing note, you have A, in a briefing note, you have B, in a briefing note, you have C, and in a briefing note, you have D. Obviously, I'm just doing one of them today. I will be doing the same question tomorrow for the B requirement, because tomorrow we have a topic on procedures and evidence, right? Now, examiner is saying you have the first requirement, evaluate the significant risk of material misstatements to be considered. So examiner is saying you want to consider the significant risk of material misstatement to be considered in planning the company's audit. And you have 20 marks for considering the significant risk of material misstatement, which is a major chunk of the 46 marks. And we know that is exactly what the question 1 is. The major chunk, close to 50, more than 50 marks are allocated, 50% of the marks are allocated to the requirement of risk. Now, a lot of time I've seen students that they just read the first line, evaluate the risk of material misstatement, and they will be happy that we got a question on risk of material misstatement, and you don't read after, which can really spoil your answer. Examiner is saying in the next line, you should not. Can you see that bold word by the examiner? Should not. And how many times the student tends to ignore should not, and they do it. What does should not mean here? That as a student, you should not do this. And a lot of time, either the student mistakenly take the should not as should, or they overlook should not. Do you think your answer can be spoiled if you overlook the should not? You have to be very careful in exam paper. Is the examiner using the word should, or is the examiner using the word should not? right? So is everyone clear? Will you be reading that in your exam paper in March 2020? Is the examiner saying should or the examiner saying should not? So examiner saying you should not include the risk of material misstatement relating to the valuation of the company's bearer plant or biological assets, which will be evaluated separately. So examiner is saying you should not identify any risk of material misstatement from the valuation of the agricultural products or the biological assets or the bearer plants. So in short, what is the examiner telling you? You should not apply IAS 41. So can we identify a risk from IAS 41? Examiner is saying you should not include any risk of material misstatement relating to the valuation of the bearer plants or the biological assets. So is the examiner saying you should not use the IAS 41? Is he refraining us from using it? And what if the student in the exam hall starts to apply the accounting treatment of the bearer plants? What if the student starts to apply the accounting treatment for the biological asset? So can we identify any risk from the biological asset? Give me quick answers. Can we identify any risk from the biological asset? No. Can we identify any risk from the bearer plant? Right? So we should just be concerned about the risk of material misstatement minus the bearer plant minus the biological asset. And this is such a big blunder the student do in the exam hall that they don't read the word should not, and they start to do the valuation of the bearer plant, they start to do the valuation of the biological asset. If I do the valuation of the biological asset, will I get marks for it? Or if I do the valuation of the bearer plant, will I get marks for it? Am I not wasting my time doing that when the examiner is saying you should not do it? So 20 marks try to attack. Then obviously you read the B part, you read the C part, you read the D part, and you know exactly what the examiner has asked for in the B, C, D. Because eventually I'll be doing the B part tomorrow, but obviously I cannot do the full question number one. I just need to give you a track of the first question because my focal point today is risk of material misstatement, where I need to spend time on. But in the exam hall, you will read B, C, D, and that ends. Then you get to the next page and you start with the exhibit number 2, which is the notes of the meeting, from where the risk of material misstatement would start to flow in. So you read the exhibit 2, you read the exhibit 3, you read the exhibit 4, because eventually you will need to read the full case study, right? Because you're not just solving the requirement A, you're also solving the requirement B, C, and D. So eventually you have to read the full case study. How much time you have to read and plan for the first question? Quick answers. How much time you have to read and plan the first question? 24 minutes. So you're getting the track. I just read the first page with you. I just read the second page with you. And obviously I'll be reading the third page, which is the exhibit 2. But I hope you're getting the track of how you go down into the first question, how you know the marks allocation, and so on and so forth. Now I'm attacking the first requirement, which is for 20 marks. See what you need to do. Okay, let's take you to the next page and let's start drilling this answer within the examiner mindset. June 2019, question number 1, we need to evaluate the risk of material misstatement minus except for valuation of the bearer plants and biological assets. Question mark, and we have 20 marks allocated. Now, how would you know how many risks you should be writing for 20 marks? The examiner is saying you should evaluate the risk of material misstatement except for the two. And you come down planning your answer. How would you plan your answer? Plan your answer. Now, first thing you should know when you're planning the answer is that you need to write it in the format of briefing note. because that will give you 4 marks extra. Then secondly, you should know how many risks to write for 20 marks. Now, when you think about how many risks to write for 20 marks, you need to know that there are two types of marking scheme. There are two types of marking scheme for risk of material misstatement as well as for the audit risk. One is there is a 3-mark risk and there is a 2-mark risk. So that means you cannot just divide 20 with 3, or you cannot just divide 20 with 2, but some of the risk will give you 3, some of the risk will give you 2. Because if you divide 20 with 2, you are writing 10 risk, which is a lot. If you divide 20 with 3, you're ideally writing 7, which might be less. Let's see how many to write. Now, you just read something with me prior to the break, that the examiner is saying that when you write a risk which has materiality, which has a treatment, which has a risk, and which has an impact. When you write this risk, which has a materiality, which has a treatment, which has a risk, and which has an impact, then this risk together will give you 3 marks. So if you write a paragraph which has materiality, which has a treatment, which has a risk, which has an impact, now that together will give you 3 marks. So that will become a 3-mark risk. Is that clear to all of you? But how many 3 marks risk can we write? How many 3 marks risk can we write? Only 3. Why only 3? Why only 3? Why only 3 marks risk? Yes, because the materiality marks are capped up to 3. Can we write more than 3 materialities? Can we write more than 3 materialities? No. So how many 3 marks risk can I write? 3 marks multiplied by 3 max risk I can use for 3 marks. So that means out of the 20 marks, I can write 3 maximum risk of 3 marks. So that means is equal to 9 marks. Is everyone clear on that? So I can only write 3 maximum risk of 3 marks because the materiality marks are capped up to 3. So I can take maximum 9 marks from 3 very important risk. Now, how many risks are left with? Now, when you write later risk minus the one with 3 marks, every risk will give you 2. Even if you are calculating materiality in the later risk, but that materiality will not fetch you any marks, right? Even in the later risk, mistakenly you calculate the materiality. Do you think in the later risk, the examiner will give you any award for materiality? Suppose in the next risk, 4th risk, 5th risk, 6th risk, you identify the materiality. Do you think examiner will give you any marks for materiality? No, he will just maximum give you 3 marks for materiality, right? So every risk you write after the 3 marks risk, every risk you write after the 3 marks risk, how many marks will you get for that risk? 2. So every risk will give you 2 marks after the 3 marks risk has exhausted. So what's the exhaustive limit of the 3 marks risk? One last clarity. What is the exhaustive limit of the 3 marks risk? Maximum 3. And what is the exhaustive marks for the 3 marks risk? Maximum. How many maximum marks I can get for the 3 marks risk? 9. So every risk will give you 2 marks after. So how many marks am I left with? 20 marks minus 9 marks is equal to 11 marks. 11 marks divided by 2. So I should write 6 more risk to gain 11 marks. So in total, how many risk to write? I will be writing 3 risk for 3 marks is equal to 9 marks. And I will be writing 6 risk for 2 marks to get my marks to 12 marks. And that 12 and 9 will take me 1 plus 21 marks in total. Is everyone ready for that structured marking scheme? Is everyone clear on the marking scheme? You can calculate, there is no issues, right? You can calculate materiality for every risk, but be assured that you will not be getting marks for it, because normally there might be more than 3 materialities in the case study, and by default we keep calculating materialities more than 3. But once you've done the first 3 materialities, wherever, you will not be getting the mark for the 4th materiality, even if you continue to do so, right? So how many total risk are we identifying? 3 plus 6, total 9 risk. Right? So please, the recording of the session is available. So if there is any issue at your end for the sound distortion, though the sound is perfectly clear at this end, if there is any distortion, you still have recording. You can watch the recording for anything you missed between the sound break at your end. Okay, this question is not asking you perform the analytical procedures, right? Because this question has already given you analytical procedures results. That is a different question which asks you analytical procedures and you get marks for that. That is something I will be concluding at the end of the day. Currently, just focus on the question I'm solving. This question says evaluate the audit risk, full stop, 20 marks. And that's how you break the marks for it. Okay, let's get to the step 2. So we know 9 risks to be found, right? Now, how to find 9 risks? Okay, just first, let's spend 5 quick minutes on the structure, then I will have good 90 minutes to solve the case study. Now, when you're starting with the June 19 paper, question number 1, you will first put the heading briefing note to get your structure ready. Right? The briefing note, and you say to from RE. So you are preparing the structure for the briefing note. So it's to whom? If you see the case study, it has the structure for you. It says the email you got was to the manager from Ben Duell, the audit engagement partner. Subject was audit planning, and then the partner said hello. Now, because you're replying to the partner, so the to will become Ben Duell, from will become the audit manager, and the subject will become the reply because you're replying to the email. So the subject will automatically become the reply. But because when you reply to an email, the subject never changes, right? So when the subject never changes when you reply to an email of a person, if I get an email and I reply to an email, the subject will remain the same. So the subject will become the reply and the subject will remain the same, which is audit planning for Margaret Company. So you're reading the structure, right? Yes, Salman, your query has been noted. The voice is perfectly clear for all audience. There might be an internal issue with voice at your end, and you can watch the recording later. But the issue you're raising for voice is not at the end here. It's at the end, which is your end currently. Okay, we were discussing the structure. So it's two from RE. So let's see the two. The two is the partner. We'll write the name of the partner, Ben Duell, as given in the exam paper, the audit engagement partner for Margaret Company, from audit manager as given in the exam paper. A lot of times the student write their own name at the audit manager. No, whatever has been given in the exam paper, just copy paste that. The subject will become the reply, RE, and you will copy the same subject from the exam paper, which is audit planning. You will not change the subject for Margaret Company. Then the examiner was telling yesterday that after you write the structure of the briefing note, you need to write the introduction, right? The introduction is basically the reason why you are writing the briefing note. Now we are writing the briefing note for four things, right? A, B, C, D. There are four requirements, right? There are four requirements. No, we don't write date in the briefing note, right? We never write date in the briefing note. If you've seen examiner formats, we never write dates. It's two from RE and introduction. So are we writing the introduction for four things? Right? So let's write an introduction. The introduction says the purpose of writing this briefing note is to evaluate the risk of material misstatements in planning the audit of Margaret Company. So that's my first sentence. Full stop. I'll write my second sentence. Further, this briefing note covers audit procedures, comma, matters. This is the C requirement, matters to consider in relying on an expert, and the D requirement, and the implication of the email from Len. How many sentences I wrote for the introduction? I just wrote two sentences, right, for introduction. And does this introduction covers all the four requirements, A, B, C, D? Does it cover all the four requirements, A, B, C, D? Everything I'm writing on the screen is must, rather than asking question, can we write this? If I'm writing briefing note, you have to write briefing note. If I'm writing two from RE, you have to write it. If I'm writing introduction, you have to write it. If I'm writing a paragraph under introduction, you have to write it. I hope that's clear for all of you, right? Because each and every heading I'm writing, there is a question popping in, do we need to write it? Obviously, you need to write it. That's why I'm demonstrating it into the live session. Is that clear with all of you? So see my introduction, how lengthy my introduction is, just two sentences. See the criticism of the examiner. I was showing you this examiner report yesterday in my live session. Examiner is saying in the examiner report for June 19 exams, green box, there are 4 professional marks available in question number 1, with 1 mark awarded for each of the following. A suitable report style heading. So I've given a report style heading, briefing note, a report style heading. A brief introduction, I've given a brief introduction. A structured, well presented answer, I need to write it. And a clarity of explanation when I start to write the answer. So 4 things. I've done the first one. I've given a report style heading, 2 from reply briefing note, that's a report style heading, and a brief introduction. Now see, examiner is criticizing students in the next paragraph saying, All candidates should be capable of achieving a minimum of 3 professional marks. It should be noted that a brief introduction is required and time should not be spent writing half a page introduction. Half a page introduction. Is the examiner criticizing the students? And time should not be spent on writing half a page introduction and a lengthy conclusion. Red. Do you remember red was what in the session yesterday? Red was the don'ts. So examiner is saying you cannot write half a page introduction or you cannot write half a page conclusion. So how much is my introduction? Just 2 sentences. So am I meeting the expectation of the examiner, everyone? Am I meeting the expectation of the examiner? Yes. Am I writing half a page introduction? No. Have I given a report style heading at the start of my briefing note? Have I given an introduction? Now what next I need to do? A structured and a well presented answer. A structured and a well presented answer. Okay, let's go back and I'll come back to the examiner report wherever I need it. Okay, let's start with the main answer now, risk of material misstatement. Okay, now once you write the introduction, you need to do 4 things, right? So you will put a heading A, and with the A heading, you will say risk of material misstatements. Wherever that ends, you will put the B heading, which is audit procedures. Then you will put the C headings, which is methods in relation to an expert. And then you'll put the 4th heading, implication of email from Len. See the structured briefing note. And at the end of the briefing note, you will have a conclusion. How long conclusion? Just a small, short conclusion. Can you see the structure in front of your screen? Now I'll start filling up the A part, right? And where A ends, you'll start the B. Where B ends, you start the C. Where C ends, you start the D. And at the end of the D, you write a conclusion. Is that structure clear to all of you? Let's start filling up the risk of material misstatement. We need to have a total of 9 risk of material misstatement to make up a 20 marks answer. Is everyone ready, set with the structure? Quick answers. Is everyone clear? Ready to start attacking the risk of material misstatement? Okay, perfect. Okay, now let's open risk of material misstatement. So my first heading will become risk of material misstatement, and I need to plot 9 risk under it. Okay, let's go to the case, start reading the case. Okay, we were reading the exhibit 2, right, which is the knowledge of the business, and we need to find the business, we need to find the risk of material misstatement from this meeting, minus the risk from the biological assets and the bearer plants. I'm reading the business background. Margaret was established 30 years ago by Jim, who began processing the fruit grown on his family farm to make a small range of food products, including canned fruit and fruit juices. The business was relatively small until 10 years ago, when the company began to expand by acquiring more farmlands with different crops and building new production facilities. Um, this just to criticize for 1 minute. You might agree with this, particularly those students who are repeaters, that you start to read the case and it says the business was relatively small until 10 years ago when the company began to expand by acquiring. And the student just focus on the word acquiring without even reading what's written after. And you say acquiring, okay, I got IFRS 10 business combination. IFRS 3, there is an acquisition, and he starts to apply everything he know about acquiring, acquisition, not even reading that it's acquiring more farmlands with different crops. Then he will say building new production facilities, and he will take, okay, building new production facilities, okay, that's I-16, property, plant and equipment, and the student starts to apply all about the property, plant and equipment, building new production facility. He will be concerned about the capital expenditure, the revenue expenditure, and blah blah blah. He starts to write everything. This is hypothetical thinking. Can you just find a risk with a word, or do you need to read the situation? Examiner says you need to find risk from the flagged issues. You cannot just find risk with words. Flagged issues where the examiner has written commentary. Now, once I go down, you will see examiner will write a commentary on a risk. But you cannot just find a risk with a word. How many times the student just look at the word acquiring and they start finding a risk? How many time the student find a risk building and they start to apply I-16? Do you all agree with that? Because there might be many such students in the live webinar today. And this is what the examiner keeps criticizing, that the student have a tendency of identifying risk, which is hypothetical risk. Right? Even this acquisition occurs 10 years ago, but students are so obsessed with the word acquisition, right, that they start to apply the IFRS 3 and the IFRS 10. That's what the student community do. So I hope you all understand the logics. The examiner says hypothetical assumption rather than you find risk from the flagged situations. So let's remove this. This is not risk here. This was just a criticism. It is recorded in the recording and it will be addressing many students. Okay, the next line. This extended the range of the food products which could be processed, which now includes olive oil, packaged nuts, and frozen fruits. So that's the portfolio of this company, right? The company sell its product under the Fructus Gold brand name, and the goods are sold in major markets and online on the company's website. Now, the moment the students see the word brand name, not even reading the case ahead, you still need to read the case. It's too early. And the student thinks, okay, brand name, ICE38, intangible asset, it should be tested for impairment or it should be amortized. Now, when you read the case later, it will tell you this is an internally generated brand name. This is not a purchased brand name. See, this is what the student is doing in the exam paper for AAA, taking quick decisions, haste decisions, without even reading the case ahead. How many times you look at the word brand name and you start to apply IS38? Do you agree with that? If I can get you quick answers. You look at the brand name and you start to apply IS38. You look at the brand name and you start to apply amortization, impairment, not even knowing that one paragraph later, the examiner will say this is an internally generated brand. So please don't get obsessed with words. Read the paragraph, because there will be so much of risk to write. Don't just be harsh in writing risk. So no risk so far in the first paragraph, right? It's just telling you the introduction of the company. And the goods are sold in major supermarkets and online on the company website. And again, you see the word online, website, and you start to find the risk of revenue recognition, that online sales have more risk of revenue recognition. The sales could be overstated. Read later. The company is not listed, and the Margaret family members are the major shareholders. Jim Margaret retired several years ago, and his daughter Maya Margaret is the company's chief executive officer, and other family members hold positions. Okay, now that's important. But see, can you see the commentary here? From over here to over here. This is not one word. This is a complete paragraph which tells you about this is a family business where Jim retired several years ago and his daughter Maya is now the chief executive officer. That means Maya has a lot of influence on this family business, being a chief executive officer, and other family member hold positions in senior management. Now, being a family business, there can be a lot of problems which we can discuss over the course of writing my answer. But I hope this family business is like one very specific issue here, We'll see how to develop this in my answer. But do you think family is a word here, or family was like a paragraph here? Was the examiner explaining the family? Was the examiner explaining the family? Do you all agree with that? If I can get your answers, please, quickly. Was the examiner explaining the family? Was the examiner showing us the breakdown of the family? Examiner could have even written, this is a family business, full stop. But the examiner says, Jim, Jim retired, his daughter replaced him. What is the sense of the examiner explaining the breakdown of the family business? That means this is something important. And the examiner is drawing your attention towards a family business here. Now, can you feel the difference acquiring, building new products, building new production facilities, and a brand name? Can you feel the difference between the previous paragraph where I criticize you and now? So this is a more specific risk, right? So let's write over here SR. What does SR stands for? Specific risk. Specific risk. This is not an hypothetical risk. Right? Is everyone clear with the terminology SR? SR stands for? Please be quick. SR stands for specific risk, right? Is there any number in the family business? How many marks will I get for the specific risk? 2 or 3? 2, because it does not have any materiality, right? So straight away, if I convert this, I can get 2 marks from the family business, because this is basically a risk without materiality accounting treatment. So any risk without materiality or accounting treatment will give me 2 marks, right? So let's go further down. Online sales. Now, can you see online sales have become a specific risk now? In the last year, sales made through the website grew significantly. Now, can I identify a risk from the online sales? In the last year, sales made through the company's website grew significantly. Now, that is not hypothetical, right? This is a very specific risk. But can I see the value attached to sales? So again, this specific risk will give me 2 marks, right? In the last year, sales are made through the company's website. So I can find a specific risk in sales and the risk that the revenue could not be rightly recognized and resulting in the overstatement of sales, right? So can you find another specific risk here? Specific risk from online sales, giving me another 2 marks, right? Next, the finance director believed that this was in response to an advertising campaign costing 225. Can you see the value for the first time? Advertising campaign costing $225,000, which promoted the brand and coincided with the launch of the new online sales portal on the company's website designed to make the online ordering easier. Now, we're not sure whether this advertising campaign of $225,000, which was used to promote the brand name, has this been capitalized or expensed out? What is the right accounting treatment for the advertising campaign which is used to promote the brand name? Should we expense it out or should we capitalize it? Excellent. We should expense it out. Is there a risk that management could have capitalized it? No, IS 38. IS 38 is very clear, right? IS 38 says any campaigns, any promotional campaigns used for brand names should be expensed out. Should be expensed out. You should not capitalize it. So can we see the value of $225,000 for the first time? Can that be converted to materiality and a treatment of an advertising campaign and the risk of the advertising campaign? So can this advertising campaign give me 3 marks? Can this advertising campaign give me 3 marks? Definitely. So let's write that over here in a very different color so that you have an identification. So this becomes green, and this for sure will give me 3 marks. So 2 marks, 2 marks, 3 marks. Now the last line. To encourage online sales, the company has regular special offers with discounts periodically offered on selection of product lines, and offers such as buy one get one free for a limited time on some products. So they have a lot of discounts on sales, which changes from a period to period. Can that be a bit distortive if these discounts are not properly updated in the system? Can this be resulting in the understatement and the overstatement of sales? Because firstly, they have a new online sales portal. And if the new online sales portal is not up to date for the discounts, because the discounts changes so rapidly, so any mistake in discounts on the system, can that result into the overstatement of the revenue or the understatement, right? Now tell me, how many risks can you identify from one issue? Because online sales has a risk of revenue recognition, and online sales also have a risk of the discount being wrongly applied. So how many risk I can write for one issue? Is there any limit of writing risk per issue? No, two. If you are writing a risk relating to the online sales and you think there are more than one risk for online sale, then what is the limit of writing a risk with one issue? Because online sales can have a lot of risk, right? The online sales can have control weaknesses. The online sales can have revenue recognition problem. There is a discount problem here. There is a discount problem here with our online sales. So is there any limit of how many points I can write under online sales? The examiner says two. You can maximum write two risk from one issue. Is that clear to all of you? You can only write two maximum risk from online sales, right? So online sales will give me how many marks now? Because for online sales, I can write 2 points, one of the discount and one of the revenue recognition. So how many points will I score from the online sales? No, 4. Why 5? There is no value. There is no value. The value is with the advertising campaign. Advertising campaign is a different risk. Advertising campaign has nothing to do with online sales. Advertising campaign is under the ICE 38. It should be expensed out. Advertising campaign was for the brand name. The brand name was a different risk. I'm talking about the online sales. There is one risk in the online sale, which is known as revenue recognition. There is a second risk in the online sale, which is known as discounts. So how many points am I getting for online sales now? 2 marks for revenue recognition and 2 marks for discounts inappropriately applied. Is everyone clear on that? And the $225,000 is a different risk. So it is quite a productive paragraph, right? This paragraph is giving you a lot of marks. 3 marks for advertising campaign, 2 marks for online sales revenue recognition, 2 marks for online sales discounts. So that's like 3 and 2 and 2. 7 marks. I've already got a risk from the family business, which I need to write. So that's taking me to 9 of the 20 marks now. Let's go down further, read the other paragraph. Recently, yes, there are so many risks in online sales, right? The cutoff risk, revenue recognition risk. So you just need to limit yourself to 2 risks per issue. You cannot write more than 2 risks per issue. Okay, research and development. Recently, concerns over level of plastic used in packaging and encouraged food producers to investigate the use of plastic-free packaging for their products. In July 2018, the board approved a budget of 400,000. So the board approved the budget of 400,000 for the research and development to be spent on the research and development. By 28th of Feb 2009, 20x9, $220,000 has been spent. So out of the budget, how much has been spent? The spent amount is 220, which with this amount being paid to ProPack, a firm of packaging specialists, to design and develop a range of plastic-free bottles. It is anticipated that the packaging will be ready for use in 2 years' time, at which point the company will introduce it for the product range. ProPack is currently testing the prototypes of the items which has been developed with encouraging results. $220,000, right, has been spent on research and development, right? Is there a risk here that what if the entire amount has been capitalized, whereas $220,000 has to be broken into two parts, the research part and the development part? Do you believe the entire $220,000 cannot be capitalized? Some part of the $220,000 will be the research cost, right? Which is to be expensed out. And a certain part of the $220,000 should be treated as a development cost. So is there a risk? How many marks will I get for $220,000? 3 or 2? 3, because you have a materiality of $220,000, right? And so this means this paragraph is important. Again, green paragraph, and this green paragraph is giving me 3 marks. Now, when you're doing an exam paper, this is your reading and planning time, right? See, in your reading and planning time, you're marking 3 marks, 2 marks, 3 marks, 2 marks. So you know, have I attained my 20 marks or not? Are you understanding the essence of reading and planning time? Okay, let's go to the next paragraph. A loan. A loan of a $375,000 was taken during the year to support the company's research and development plan. So a loan was taken. So can we find the materiality of the loan here? So, and can we think about an accounting treatment of how the loan should be classified in the financial statement? Probably if it is a long-term loan, then it should be broken down into the current liabilities and the non-current liabilities. Can we think about the classification issue relating to the loan? So can this loan give me another 3 marks? It can, right? So 3 marks from loan. Now, have I maximized my 3 marks? Have I maximized my 3 marks? Yes, there are so many risks relating to the loan, right? You can write any one of them, any two of them. But do you find this loan has a value which can give me 3 marks, irrespective of which risk you write for loan? Because there can be so many risks associated with loan, whether you apply the IFRS 7 or the IFRS 9. We have reached the limit of 3 marks, right? The recap, advertising campaign, research and development cost, and loan. 3339, right? We got so many 2 marks risk. We got so many 2 marks risk. We got the 2 mark risk from the family business, the 2 mark risk from the online sale, and then another 2 mark risk from the discount, and if the discounts are wrongly applied. So already it's like 6 marks and 9 marks. We're already getting to 15, right? Let's do one last paragraph and then start writing the answer, because that's more important. The next paragraph, factory damage. One of the company's factory used to process fruit and produce fruit juices was damaged in 20x8. High winds destroyed part of the factory roof, and heavy rains led to flooding and damage to machinery. The factory has not operated since the storm, and the finance director has performed an impairment review. So that's good. The finance director has performed an impairment review because there was an indicator of impairment. So far, so good. On the building and plant and equipment, details of the impairment review are given in the exhibit 4. So we need to see whether the impairment working is right or wrong, because if the impairment working is wrong, that will give rise to another risk. But has the management done good? They have tested the factory for impairment. But is there a risk that the impairment, the recoverable amount in the impairment was wrongly calculated? Can I get a quick answers? They have done the impairment review, wonderful. But is there still a risk that the recoverable amount may be wrong in the impairment? So can there be another risk of impairment? And if obviously impairment has a value which can be in the exhibit 4. So the exhibit 4 will have the value. And if that value is used in the exhibit 4, the exhibit 4 will have the value. And if I use the value in the exhibit 4, this can also become a 3 mark risk. So I'm exceeding now. Now that means you can even choose in the exam paper which 3 mark risk you need to write, the one on which you are better. or on the one on which you are good at. So you can even choose the 3 marks risk to write, because this is another opportunity of a 3 marks risk, right? And then you go to the exhibit 4, right, to see what exactly is happening in the exhibit 4, right? The next risk is the use of an auditor expert, which is the requirement number C. So I'm not looking at this because this paragraph is made for the requirement C of the exam paper using the work of an expert, which has allocated marks. So I'm going off from this exhibit into the next exhibit. Okay, then there is an exhibit 3, which is for another requirement, which is for the requirement number C again. So I'm not looking at the exhibit 3. You have to study the whole exam paper, right? Comes the exhibit 4. Now in the exhibit 4, which is the financial statements. Obviously, financial statements are important because you can get so many risk out of the financial statements. Can you see the note numbers in the financial statement? 1 and 2. You cannot ignore them because every time the examiner gives you a note number, there is there is a confirmation that every note number will have risk. These are important risk. Note number 1 relates with intangible assets. How much intangible assets have increased from the last year? They were 50 and they've almost increased to 525. Is there a lot of increase in the intangible assets? So that means a lot of things have been capitalized, right? Let's see what's happening in the intangible assets. Note number 1, intangible assets. See, last year the intangible assets were 50, this year they've become 525. How? Firstly, they have capitalized the software development cost 50, 80. So there is a $30 million capitalization of the software development cost. Advertising cost. We just read that. See, the company has capitalized the advertising cost relating to the brand. Is this right? Is this wrong? Have you already identified this as a risk? That the advertising cost relating to the brand cannot be capitalized? So we have already identified this as a risk, right? And have they capitalized the development cost in full, $220,000? When we thought that the $220,000 could even have a research cost. Is that true? Can we capitalize the entire 220, or is there an element of research in 220 which should have been expensed out? Is there a risk that the development cost is overstated? The development cost is overstated because you didn't capitalize you even capitalize the research cost. So do you think $525,000 is overstated because advertising cannot be capitalized, right? And the development cost also includes an element of research, right? Okay, let's go down reading further. The software development cost of 30,000 were capitalized during the year, which relates to the development of the online sales portal. The finance director suggests that the software development cost and the advertising cost should be capitalized, so on and so forth. Okay, fine. You can capitalize the software development cost, but obviously you cannot capitalize the cost related to the advertising. So software development cost, can that be capitalized? Yes, subject to the criteria. But can we capitalize the advertising cost? No. Okay, the Fructus Gold brand name is not recognized in the statement of financial position as it is internally generated. And see, you start to find the problem in the exam paper. Is not recognized. And the students, half of the student in the exam paper will say, not recognized, oh, it's a problem. It should be recognized. Is it the right accounting treatment? The brand is not recognized because it's internally generated. Will you criticize it? Not at all. Because it's the right treatment. And a lot of times the student unnecessarily criticize the accounting treatment when even it is right. Then there is a note on the property, plant and equipment. Let's see what's happening in the property, plant and equipment. Note number 2, the property, plant and equipment has come down from the last year because of the impairment. There was an impairment of the factories, right? There was an impairment of the factories. So the impairment of the factories, note number 2. The carrying amount of $6.15 million includes 880, 250 relating to a storm damaged factory. So the factory amount is 880, 250. The factory is a cash generating unit, so it should be tested for impairment, and the management has done the impairment review. The finance director has provided a summary of calculation, and the finance director thinks that there is an impairment loss of 210, which should be recognized. So let's see, is the impairment loss determined rightly on the factories or not? This is the impairment loss. The carrying amount is 880,250. Recoverable amount is the higher, which is right. Recoverable amount is the higher of the fair value and the value in use. So the management has taken the higher of the fair value and the value in use, which is 670 higher. And on the basis of 670 and 880, the management has determined a loss of 210. Let's see, have they done the right working of recoverable amount? The fair value less cost to sell has been estimated. And we know anything which is estimated is risky. So are we sure that the fair value has been estimated rightly? Can there be risk in the fair value estimations? Based on the sales proceed which could be generated from selling the damaged factory, the value in use is estimated. Another estimate based upon the future sales which could be generated if the damage to the building is repaired and the new machinery is put in. Do we find the value in use as at the present condition of the factory, or do we find the value in use considering the repair work and the new machinery is put in? Do you think the value in use has been calculated wrongly here? The value in use is on the present condition, right? The value in use is not on the future condition of the factory. Do you all agree? So do you believe that the value in use has been determined after the building is repaired and the new machinery is put in, which is wrong? The company is planning to carry out the restoration and buying the new machinery, but you cannot include that in the determination of the value in use. The value in use is the present condition. So the company is planning to carry out a restoration of the new machinery and a total estimated cost of 450. This amount has been provided for within the current liabilities, and a corresponding entry has been done to prepayment. The company is planning to carry out the restoration, and the company is planning to buy the new machinery with a cost of 450. How can we recognize a prepayment? Have we incurred the expense? Can we recognize a prepayment for an expense which has not been incurred? Can we recognize a prepayment for an expense which has not been incurred? So have we incurred the expense? Do you all agree? Have we incurred the expense? Have we incurred the expense? No. So can we recognize a prepayment? Can the prepayment be recognized? Right? Because we have not yet incurred the expense. We're just planning, right? So in that case, we cannot recognize the prepayment. So do you believe the prepayment is overstated? So that ends the question. So do you believe the recoverable amount is wrongly calculated? Do you all believe that recoverable amount is wrongly calculated? And that means the impairment loss is understated. Impairment loss is understated. So this can be a 3 marks risk. This can be a 3 marks risk, right? And then another risk is the prepayments. Can we find the materiality of the prepayment $450,000, right? And can that be converted to a 3 marks risk? Yes. Now let's find the answer. How many 3 marks risk we have, and can we take a choice of writing any three of them? Let's find the plotting of the answer, and then I'll tell you how to gain marks on it. I hope everyone is sound with the case. Let's first make a sketched answer, how many marks we have and how many marks we need to gain. Number one, I'll be solving the answer, right? Just wait for 5 minutes. I just need to make my structure and then I'll start the answer. Okay, the first risk in order I got was basically the family business, which I thought is a 2 marks risk. Then the second risk I got was the online sales, where I can find a risk of revenue recognition. Revenue recognition could be at risk, and for that I can get 2 marks because there was no value. Then the third risk I got for online sales, because I can find maximum 2 risks per issue, was the discounts if wrongly incorporated. If the discounts are wrongly incorporated, then the sales can be under and overstated. So that's another risk which can give me 2 marks. I'm going in the order right. I'll be writing it. What's the impact of the family business? Then we found another risk was the advertising campaign. Advertising campaign was capitalized. It has a value $225,000. Because it had a value of $225,000 and it was wrongly capitalized. That was the risk. Now this can give me the 3 marks. The materiality, the treatment, the risk, the impact is equal to 3 marks. The materiality, the treatment, the risk, the impact, advertising campaign. Then in the order, I got the other risk, research and development cost. Research and development cost. And the research and development cost even had a value $220,000, which was wrongly, which was fully capitalized, even the research cost, fully capitalized even the research cost, which was the problem. Again, this will give me MTRI, and the MTRI will give me 3 marks. I'm going in the order, right? I'm going in the order. I'm not breaking the order. Then the next risk I got was the loan. There was a loan. The loan had a value, which is $375,000. Being a loan for $375,000, again, I had a value, and there could be several risks associated with loan. It could be the disclosure of the loan, it could be the classification of the loan, etc. But again, this is a situation which can give me MTRI and I get my 3 marks. So far, till my risk number 6, I've got 6 marks ABC, 3, 3, 3, 9, 9 and 6, 15. So I still need to continue my journey, right? Right? So we need to understand important thing here, that the loan, $375,000, several risks associated with the loan. The next in order, the impairment. Okay, there is a risk of impairment, which we found next, and the impairment risk was that the recoverable amount was wrongly determined. And because it had a value with impairment, so again, this is a risk which can have the MTRI, which will give us another 3 marks. So we already have several 3 marks from where we can choose 3 to write. The D, the advertising campaign, has 3 marks. The research E has 3 marks. The loan F has 3 marks. Then we have the impairment 3 marks. And you continue. From the factory damage, we went to the financial statements extract, right? And when we look at the financial statement extracts, in the financial statement extracts, we got risk of okay, in the financial statement extract, the intangible asset risk have already been incorporated, which is basically the D and E. Then the property, plant and equipment, right? We already incorporated the risk of impairment for property, plant and equipment. And in the impairment, you can have multiple risk, right? In the impairment, there were two estimates. You can bifurcate them. One estimate was basically the value in use, which can be one risk. The other estimate was the fair value. Sorry, we had another risk from impairment, just forgetting that, which is basically the prepayments. The prepayments was wrongly recognized. The prepayments were wrongly recognized, which was basically too early, and that prepayment had a value of $4. The prepayment had a value of $450,000. It can be converted to a risk of 3 marks. MTRI can give you 3 marks, right? Another risk of 3 marks, but we can write maximum 3. So eventually, if I'm writing a risk of prepayment, it will not give me 3, it will give me 2 if I've already written my 3 marks risk, right? Okay, the next, we still have uh, the analytical procedures. In the case, if you look at the financial statement, a lot more risk can come out of the analytical review even. We have not yet touched upon the analytical review given. So let's start writing the answer. I'm not giving you any breaks here. That's totally up to you if you want to be going on break and then watch the recording, because I just have very less time. I need to draft some of the answers with you to show how you exactly make a good answer. I'll be writing certain 2 marks risk and I'll be writing certain 3 marks risk, right? Now, if I go in order, listen very carefully. If I go in order, family business 2, online sales 2, another online sales 2, advertising campaign 3, research and development 3, loan 3. Now, till F, my 3 marks are over, right? So if I write G, will I get 3 marks? Will I get 2 marks for writing the G with value? If I write G, will I get 3 marks? Will I get 2 marks? Okay, 2. And then if I write H, after I have written D, E, F, will H fetch me 3 marks or 2 marks? 2. So I hope everyone is clear, right? Now let's start writing the answer. This is how you will be writing a good answer, right, for risk of material misstatement. Suppose you start with the family business first. Family business. You put a heading, and under the heading you write a 2 marks answer for the family business. Margot company, being a family business, business or a private company, have risk of management bias, particularly because the chief executive officer is one of the family member and is influencing the CEO, can influence the financial results for better dividends, and the financial statements could be materially misstated. Now, if you want to be very good here, and you go to the exhibit number 4, you will find that in the exhibit number 4, the dividend payments have already increased from the last year, from 1,000 to 1,200. Can you find the increase in the dividend payments from the last year to this year in percentage term? If you can see the exhibit number 4, the dividend payments have increased from 1,000 to 1,200. How much is the increase in the dividend payment? Right, obviously within the family business, many family members can benefit from the family business, right? Many family members can take higher dividends by manipulating the results. So the risk of management bias is not just in a it's not just in a listed company, it's also within a family business, because a lot of family member can take advantage of the family business and can have their own personal wealth out of the family business. I hope you understand that. Okay, 20%. So dividend payment dividend payment has already increased by 20%. A lot of family members in family business can take advantage of the family business and exploit other family members for their own personal gain. So the self interest of the family members still remain there, because every family member would like to get more income from the family business, so they can manipulate results for better dividends, which can be their own self-interest. Right? So that's the family business. See how many sentences I wrote, just like 3 sentences wrapping up my 2 marks answer. I didn't drag my answer. There is no dragging element, right? Number 2, online sales. Now, when you're writing the point for online sales, you will simply write it in a manner, because you need to take 4 marks from online sales. So you need to write an answer for 4 marks. There are several risks of material misstatements associated with online sales. How many marks can we take from online sales? Maximum 4, because we can write 2 risks from online sales if they are available. There are several risks of material misstatement associated with the online sales. Firstly, comma, there could be a risk of revenue recognition. There could be a risk of revenue recognition due to timing of recording recording revenue on due to timing of recording revenue. Firstly, there could be a risk of revenue recognition due to the timing of recording revenue generated from website sales, as the point of revenue recognition will be more difficult. Because mostly on the website, whenever you book an order, there can be a problem that on the booking of the order, the revenue gets recognized, whereas it should not be recognized on the booking of the order. Rather, it should be recognized when the goods have been dispatched. So this is a very general risk with online sales, right? That there could be a revenue recognition problem, as the point of revenue recognition will be more difficult to establish. Thus, revenue could be overstated. Online sales has already increased. If you go back to the exhibit number 4, if you just find the increase in the online sales, can you find the increase? Can you find the increase in the online sales? It was 1310, now it's 2495. Quick answers, please. In the exhibit number 4, if you can see the the online sales were 1310. Now the online sales are 2495. Okay, so that's almost 90.4% increase from the last year. So the online sales have already increased by 90.4% over the last year. Uh, Thus, such risk of overstatement exist, could exist. Can you see when I'm writing the answer, I am making use of the financial statement numbers where possible? Does that makes the answer powerful? Does that shows your assessor that you were mentally present in the exam hall, that when you were saying that the sales could be overstated, you exactly know that they have already increased? Will that make a good answer? Will that make a remarkable answer? Number two, I get 2 marks here, right? I get 2 marks for the revenue recognition. I get 2 marks for this. Then I write another risk from online sales. Further, comma, due to fluctuating discounts, offered on online sales, there is a possibility that if the discounts are not updated into the system properly, the sales could be under or overstated. So further, due to the fluctuating discounts offered on online sales, there is a possibility that if discounts are not updated into the system properly, the sales could be under or overstated. And I get another 2 marks for this. Maximum 4 marks per one risk. Right? Is that clear on the drafting style? Can you find the risk? Financial statements could be materially misstated. Was my risk? Am I writing it without a risk, without an impact? Over here, I said that revenue could be overstated. When you can identify an account balance, when you can identify an account balance, you have to be very particular about under and overstatement. But where you cannot identify an account balance, like a family business, you cannot identify an account balance. So you will say the financial statements could be materially misstated. Can you understand this? In a family business, I could not identify the account balance. So I just wrote financial statements could be materially misstated. But in the online sales, because I could identify the account balance, so I said thus the revenue could be overstated. So can you understand there are two types of impact? One impact is on the account balance, one impact is on the financial statement. Is everyone clear on that? Quick answers. But can a risk be without impact? Can a risk be without impact? Not at all. Okay, now let's get to a 3 marks risk quickly. The third risk in order, advertising campaign, wrongly capitalized, 3 marks risk. So you put a heading, advertising campaign. Follow the rules of the examiner. Briefly explain the treatment. The advertising campaign capitalized as intangible asset. The advertising campaign capitalized as intangible asset amounted to $225,000, which is how much percentage of the total assets? Because it has been capitalized as an intangible asset. So what is the total assets of the company? 12,500. Can you just divide $225,000 with 12,500? 1.8%, okay, which is 1.8% of the total assets. And because it needs to be expensed out, right? So $225,000, how much is that of the profit? Profit before tax, 2,100. 2,100 is a profit before tax. It should have been expensed out. So how much is it in the proportion of the profit before tax percentage? $225,000 divided by the profit before tax of 2,100. I'm waiting for answers, quick answers. Anyone can help in that? Okay, 10.71% and 10.71% of the profit before tax, thus material to the financial statements. 1 mark, 1 mark for the materiality. Next paragraph, accounting treatment. The advertising cost incurred in relation to promotion, in relation to the promotion of the brand name cannot be capitalized, cannot be capitalized as as uh, mentioned in the relevant standard. You cannot say as per ICE 38 or the title of the ICE 38. You're saying the advertising cost incurred in relation to the promotion of the brand name cannot be capitalized as mentioned in the relevant standard. Thus, it should be expensed out. You write the accounting treatment briefly. Did I make use of the name of the standard? Did I make use of the number ICE 38? And the examiner was saying briefly. Every time briefly will be different. Over here, the briefly is so brief that I'm simply writing a line that the advertising campaign incurred in relation to the promotion of the brand name cannot be capitalized as mentioned in the relevant standard. Thus, it could be expensed out. So I got another 1 mark for accounting treatment. Then I come to the risk. I hope you remember the risk. Risk is thus the advertising campaign is wrongly capitalized. Risk wrongly capitalized is the risk. Thus the advertising campaign is wrongly capitalized and thus the intangible assets, are overstated and the operating expenses are understated or the profit is overstated. I wrote the impact. Can you make the difference between MTRI now? M, then I wrote the T, then I wrote the R, then I wrote the I. Can you find the MTRI in my answer? And the last paragraph, which has the R and which has the I together, will give me 1 mark. So 3 marks. Is everyone clear on the drafting style of the 3 marks? Answers, please, quickly. Can you respond to that? Did you find the structure of how am I writing? And if you write this way, then only you can complete the paper. But if you're bothered about the examiner answers, the length of examiner answers, I've seen students writing half a page on advertising campaign, almost a page on advertising campaign. How would you complete your paper? Your objective is to complete the paper, not the examiner objective. Examiner objective is to guide you. Your objective is to complete the paper. You will get success when you complete the paper, right? Examiner is irrespective of that. Examiner is to guide you. You need to get success. Okay, let's write another 3 marks point for you. The next one, just to show you brief accounting treatment. If I write the research and development cost, which was $220,000, let's see, do the accounting treatment vary? Research and development cost. Research and development cost. The if I put the bracket, I'll say R&D, so I can use the short form later, which is another good practice. The research and development cost pertaining to what? Pertaining to new packaging. Pertaining to the new packaging amounts to the research and development cost pertaining to the new packaging of $220,000 is how much of the total assets quickly? Divide $220,000 with the total assets, okay, is 1.76% of the total assets. And how much of the profit? And profit quickly, because some of them has to go to the expense, right? So for that, we need to find the profitability as well. How much of the profit quickly? I hope all of you have the calculators, right? Because you're too slow in responding. Okay, and 10.48% of the total assets of the profit. Of the profit before tax, thus material to the financial statement. We normally say thus material to financial statement, not say thus material to the total asset and thus material to the profit. We just say a broad line. Okay, 1 mark. The next, the total, you're writing the accounting treatment. The research cost should be expensed out, whereas the development cost should be capitalized, whereas the development cost should be capitalized subject to the subject to the criteria laid in the relevant standard. Treatment. However, the risk is that management has capitalized the entire $220,000, which means that which has capitalized the entire $220,000, and there is a possibility that the research cost has even been wrongly capitalized, risk. Thus, the intangible assets, not the assets, intangible assets. Thus, the intangible assets are overstated and the operating expenses are understated. See how you converted that last line, making another risk and impact answer. Risk plus impact is equal to 3 marks. So I've already drafted some 3 marks for you and some 2 marks for you, right? I'll just be doing one final drafting and we'll be wrapping up the examiner commentary. What is the examiner commentary on this answer? Because that's very, very important. Is everyone clear with the drafting so far? Are you getting the track, how to write a briefing note, how to structure the briefing note, how you plan the answer? Because I spent a lot of time reading the case study and identifying the 3 marks and the 2 marks. Are you getting clarities on 3s and 2s? Are you getting the maximum cap of 3 marks? Are you getting the clarity on the marking schemes? If you can just quickly respond into that. I'm just giving clarity on the analytical procedures. Just wait for 5 to 10 minutes. I'll be doing that in the last 5 to 6 minutes. And again, please keep dropping your feedbacks about the understandings and about the feedback of the ROMM topic today in the session, that how much eye opener has this ROMM session been for all of you, and how many mistakes have you identified considering you have given a previous attempt on the same topic, or particularly if you're going for the first exam sitting. Do you think this session on ROMM has really been effective for all of you? Keep dropping your feedback about the session today. In between, I continue drafting one more risk for you and one more accounting treatment risk for you, so that you know the length of the accounting treatment can vary. let's do one thing on impairment, because impairment was a very long situation, right? Will that change the length of my answer if I do something on impairment? Impairment. The carrying amount of the property, plant, and equipment, the one which you impaired, basically, the carrying amount of the impaired factory, because you find the materiality on the carrying amount, right? Okay, the carrying amount of the impaired factory, that is the carrying amount of the impaired factory, that is $880. What's the carrying amount of the factory? It's, I think, 880 something. The carrying amount of the factory is dollar 880 250 is how much of the total assets? Because it's just the balance sheet item, right? The carrying amount. So can you just divide it with the total assets, not with the profit before tax? Is how much of the total asset? Okay, is 7% of the total assets, thus material to the financial statements, right? No income statement, because it's just a balance sheet item. The research and development had both effects. The advertising campaign was already part of the intangible asset, so I need to find both values. Okay, next, 1 mark. The value in use, I'm come directly, rather than I just repeat things, the problem, and I will only write the accounting treatment on the problem, rather than I start to tell examiner that the recoverable amount is the higher of this and this, and how, and I start telling that there has to be an indicator of impairment, blah blah blah. I start writing everything. No, I need to be very specific. The value in use, because that was the concern factor, the value in use is determined on the basis of the present condition of the factory damaged, without incorporating any future any future plans which management have to repair or restore the factory as per the relevant standard. So the value in use is determined on the basis of the present condition of the factory damage, without incorporating any future plans which the management have to repair or restore factory as per the relevant standard, right? Thus, the value in use is wrongly estimated. Risk is wrongly estimated. Thus, the value in use is wrongly estimated, and therefore the recoverable amount is wrongly determined, and therefore the recoverable amount is wrongly determined. Impact: due to inappropriate calculation of value in use, or due to inappropriate estimation of value in use, the impairment loss determined could be understated, and the profit overstated. Another 1 mark, because it's a risk plus the impact, and it gives you total 1 mark. Wrongly determined, 1 mark. Sorry, wrong. The accounting standard, and then you have, sorry, the wrongly determination, the last paragraph. See, again, 3 paragraphs giving me 3 marks. The value in use, right, as per IAS 36, when you determine the value in use of any asset which is being impaired, the value in use is of the present condition. You cannot just say, okay, I'll repair my factories in the future, and then you consider the value in use considering the renovation of the factory is as of today when it has been damaged. The factory which has been damaged, what's the value in use of that factory? Ignoring any future repairs. Right, is that drafting clear to all of you? I'm not doing any further draftings. You can continue on with it. I just need to guide you on one few of the important things on ROMM apart from this question. That's how you structure the question. And then where you end the part A, you will have the part B, you will have the part C, you will have the part D, right? That will be the order. And then finally, you write a conclusion. You can write a conclusion of the whole briefing note, right? And you can even write a conclusion of the risk of material misstatement because that's the major chunk of the 46 marks. Is that clear to all of you? You can write a conclusion of the whole briefing note, or you can write a conclusion of just the ROMM because that's a major chunk of the 46 marks. But the conclusion has to be brief. How would you write a conclusion? The financial statements of Market contains numerous risk of material misstatements as identified above, and we should carefully, you're telling the partner, we should carefully plan the audit procedures, or we should carefully plan the audit procedure or execute the audit to ensure that proper focus is given to mitigation. Proper focus is given to the mitigation of each risk identified. Full stop. Examiner was saying the conclusion has to be small, concise, and the introduction has to be concise, right? Again, my wordings are important. Conclusion can be of the whole briefing note or can just be of the risk because risk is the major part of the briefing note. But the conclusion has to be crisp, concise, short. So is the introduction. So is everyone clear on the structure of the briefing note? The briefing note should have a heading briefing note. The briefing note should have a to, from, RE. The briefing note should have an introduction. The briefing note should have a logical order A, B, C, D. And the briefing note should have a conclusion. Is everyone sound clear on briefing notes? Okay. And is everyone clear on the marking scheme 3 and 2? Okay, just one last important thing to be addressed here. Now, if I just show you 1 minute, the exhibit 4, which had the financial statements, and the financial statement says that the results of the analytical procedures are already given. That means someone has calculated them for you. And if you see the results of the analytical procedures given in front of the page you have, you can see that already the examiner has calculated for you the analytical procedures. And it says that the current ratio of the company has increased from 1.4 to 2.6. You can even find a 2 marks risk from the current ratio. There are two types of situations, right? There are two types of situations. in terms of analytical procedures. One situation is where you need to calculate the analytical procedures, and one situation is where analytical procedures are already given and you need to work on it, right? So, for example, the current ratio, and you find the risk in the current ratio because the current ratio has increased from 1.4 to 2.6. And if you see the current assets of the company, the current assets of the company has increased a lot from the last year. So there is a possibility that you find a percentage and you tell that the current assets have increased a lot from the last year. And because the current ratio has increased from the last year, there is a possibility that the current assets are overstated. And if you see the cash balance has been very consistent. The cash balance is 750, 760. So that means if something has overstated in the current asset, could be receivables, could be inventory, because the cash has been very static from the last year, 750, 760. Despite that, the current assets have increased. Then what could increase in the current asset? Receivables, inventory could be at risk of overstatement. So you can develop 2 marks on current ratio because current ratio is a very specific risk here. Is everyone getting this point? Is everyone getting this point of the current ratio? Yes, 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 you can. Megna, you can exactly do that. The question is very valid, right? Gearing ratio. Can you see a risk in gearing ratio? You can also get 2 marks from here. The gearing ratio has decreased despite the fact you've taken a new loan. So does it mean that the gearing ratio given by the company is distortive because they've already taken on a new loan? Despite that fact, there is there is a reduction in the gearing ratio. So try to understand one thing conclusively here. See, there is one type of a question which says evaluate the risk of material misstatement when the results of analytical review is given. Then there is a second type of question which says evaluate the risk of material misstatement when the examiner asks you to perform an analytical review. Can you feel the difference between the two requirements? In one case, the one we are doing today, it says that the results have already been given to you, right? This is the type we are doing in the June 19 question number 1. This is another type which you can find in the past papers, and I've already covered that in my previous webinars. I think that's basically, if just I can remember, it's June 17, question number 1, perhaps. I've covered that in my previous webinar, which when the examiner says you need to perform an analytical review. So when you're doing a question like June 19, where the results are given, then if you convert, the results into risk, each risk will give you 2 marks, like current ratio. If you convert the current ratio into risk, you'll get 2. If you convert the gearing ratio into risk, you'll get 2. That's only the case when the results of the analytical review is given. Is that clear to all of you? Right? But in the second question, when the examiner says you need to perform an analytical review or you need to utilize an analytical review, I hope you've seen a question like such when the examiner says you should utilize the analytical procedure or you should perform the analytical procedure. Then in such a question, to perform an analytical review, plus the commentary on analytical review, you have maximum 3 marks. That means you will calculate you will calculate any three ratios from the data and comment on the risk in comment on the risk associated with the ratio. See, if the question comes which has given you the current assets and current liabilities, and the examiner asks you utilize the analytical procedure, so you will take out the calculator and you will say, okay, I need to utilize the analytical procedures myself. So, okay, let's calculate the current ratio myself. So, if you calculate the current ratio yourself and you convert the current ratio into the risk, now that together is 3 marks maximum. You need to calculate three ratios. You need to calculate three ratios and three commentaries for 3 marks. That means 1 mark per ratio and commentary. So current ratio and the commentary on current ratio will give you 1 mark when the examiner says perform an analytical review. But in a question like June 19, when the analytical review has already been performed and you're converting the analytical review into a risk, then that will give you 2 marks. Yes, previously it was 5. Now the marking scheme have changed. It is now 3. Is everyone understanding the difference between the two types of questions? I've already covered the June 17 in my previous webinar. Please have a look at that. But the marks used to be 5. Now the marks are 3. So you will calculate the three ratios with 3 comments and you will gain 3 marks. But when the results are given like the June 19 paper, you will just convert them to risk for 2 marks. Yes, you need to show the calculations. When you get the question number 2, you need to show the answers of the ratio. No, not at all, Harim Hassan. The answer to your question is no. Yes, the APs have capping, right? APs have capping in the type 2, right? In the type 2, the APs have capping. You have 3 marks in the type 2, but in the type 1, the current ratio, just like I shown you, the current ratio can give you 2 marks. The gating ratio can give you 2 marks. There is no capping, right? In the type 1, there is no capping, but in the type 2, there is a capping of 3 marks. Yes, you can put that ratios calculated in the body of your answer. Right. And again, any further questions on clarities, please put your messages on the WhatsApp group. And please watch my previous webinar, December 19, because the December 19 webinar will give you the second type of the question I did. So you have a clarity on when the examiner says perform the analytical review, it carries 3 marks only. That means 1 ratio and 1 comment, 1 mark. Another ratio, another comment, 1 mark. Another ratio, another comment, 1 mark. So you're capped to 3. But if a question comes like June 19, which says results have already been given, then you will convert every result into a risk and you can get 2 marks. Yes, exactly, Abdullah. The question you are raising has a yes answer. Okay, now just into the dying moments of my day 2. I need feedbacks quickly, constructive feedbacks from your side as to how the session today had been on the risk of material misstatement. I tried bringing a June 19 paper today in the ROMM session just to give you another practice, because there is a December 19, September 19, there is a June 19 and March 19 for you to explore. But I just made this March 20 different by bringing into account the June 19 paper and drilling it perhaps in a different manner to give you a better understanding. So keep dropping your feedbacks quickly into the last 3 to 4 minutes. That would be really helpful. And once the session gets over, at the end of the session, you will get a feedback form. Kindly fill the feedback form in a very proper manner. Now, just a final recap for the day. We were focusing on the day 2 today, which had a very definite target, a risk of material misstatement. and I practiced with you the June 19 paper. And with that, I've given you two home questions, June 18 and December 19. You have to do it in the same manner as it is done in the session today. I'll be sharing the Word file with you. I will be sharing the Word file with you at the end of the session on the WhatsApp group. And I hope all of you know that we're meeting tomorrow for the day 3, which is on procedures and evidence, which is another very, very important topic which will be covered in the session tomorrow. Uh, Please ensure that you read the examiner report for the question number 1 of June 19, which I even started yesterday, and I've shown you a glimpse of that in the session today. You need to read the examiner article, part 2 on risk. You need to read the examiner report for June 19. Both of them are very, very important. Okay, uh, there is a question asking for, I need a little clarification. In the second scenario, I need to write 3 marks, 7 points for 20 marks. No, in the second scenario, you need to calculate 3 ratios. You need to show the answers of 3 ratios. And for the 3 ratios, you will comment on the risk. What is the risk in the ratio? You can see the answers of the examiner. It's about calculating the ratio and commenting on the ratio in the second type, and that will fetch you just 3 marks maximum. Okay, that's good if you're getting to know your mistakes. So that's the reason of these practice to pass sessions being organized by ACCA Pakistan, just to guide you on the mistakes, right? And then again, any questions which you think has not been addressed, because my focus is on delivering the content, you can just put it on the WhatsApp group, which has been made for your support, and I'll try answering questions over the WhatsApp group, or the other students who have clarity can respond to your questions. Yes, yes, yes. It's mandatory to identify a detection risk in an audit risk question. Yes, 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 Ashad Siddiqui, you can do it. You can do it. That's quite perfect. That's quite perfect. Yes, I'll be sending the summaries of the accounting standard on the WhatsApp group, because that's the most sought after document. Okay, so tomorrow we're meeting with the procedures and evidence, yet an important day 3 tomorrow, and I'll be practicing more recent papers on the procedures and evidence. If you want to get an understanding about detection risk, please explore the Examiner article. The Examiner article has given you insights about detection risk, because I was not doing audit risk, but yes, you can learn a lot about detection risk from the Examiner article, uh, which is right here, page number 7. If you can just read this paragraph back at home, this is last paragraph of the page 7, you will be very crystal clear about what a detection risk is, right? Okay, so that's coming to the end of the session, day 2. I hope you had a nice session. Please drop in your feedback at the end of the session as well. I'll be seeing you live tomorrow for day 3 of the practice to pass session for March 2020, which focus on procedures and evidence. I hope you had a nice session today. Have a nice day. Uh, Practice, 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 because that's the key to success in the AAA paper. And I'll see you live tomorrow, 6 to 9 p.m. The Pakistan Standard Time. It was nice having you all on board in the live session. Goodbye and Allah Hafiz.